Hey, what's up guys? John here. In 2007, billionaire real estate investor Sam Zell liquidated his entire real estate portfolio at the height of the market for $39 billion to Blackstone. He made a fortune, his investors made an absolute fortune. Blackstone also did quite well because they sold everything, nearly everything, right at the height of the market before everything came crashing down because they knew big problems were coming, but they could not turn down the amount of money they could make in fees doing the transaction. So everything worked out well for all of them, but they got lucky. Nowadays, people aren't getting lucky. They didn't cash out at the height of the market in 2021 and 2022. Now you're starting to see one big real estate syndicator, investor, an entrepreneur that got into real estate go down after the next. Here's a good example of that. Storybuilt. They own a $2 billion real estate portfolio, filing bankruptcy on several of their entities right now. Why are they doing this? Well, because there's a bunch of events that are unfolding in the real estate market that not many people anticipated. And what I think is going to happen is the buying opportunity in 2024 and 2025 will be far greater than during 2009 and 2010 by a landslide. Because you look at the mania that was built up on 0% interest rates, on 20-30% rent growth, on everything that was happening in the economy, now slowly getting pulled out with it. Thousands of real estate investors. And I'm going to break it down for you. I'm going to show you exactly what's going on so you can position yourself and your family to take advantage of what I believe is going to be the greatest wealth transfer in American history. Please hit the like button. When you hit the like button, YouTube will share this content to educate more people about what's going on. And if you'd like to fix your credit, we'd love to help you. My company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session. Take a look at this. So, Storybuilt. Entity files for bankruptcy, right? 3 other entities. Storybuilt, $2 billion portfolio, right? Pretty substantial. But look at what they were doing. So they were investing heavily in Austin, Denver, Dallas, and Seattle, right? Some hot markets. Now look at what's happening in Austin. This is not just Austin, by the way, because I'm going to show you what the White House is doing as well. That's national. So you can see on a wide stage what's coming to the real estate market. So Austin, they're building 120,000 units. It's in the pipeline, right? Substantial, considering they only have 433,000 units. So to put that in context, 27% increase of housing stock. Substantial, right? Like that's big. The average investor that was buying in Austin, buying at a 5% return. So if you increase inventory 27%, you could imagine that rents are likely going to fall. They're likely going to continue to fall. But when you add in the fact that 2 days ago, Austin will now allow more homes to be built on single-family lots, city officials hope that allowing up to 3 units per lot will increase supply and slow the explosive increase in housing costs. You can imagine that as the economy starts to soften up, people are going to need to make more money to combat inflation, the high cost of insurance and taxes and everything else. So they're probably going to try to borrow money to build ADUs on their property. It's going to become more and more normalized, meaning that this 27% probably is going to go to 32%, 35%, somewhere in that range, right? Maybe higher. When you look at this, you realize that the mania that was in the Austin housing market is over. A lot of those investors are going to be in really hot water when they have to refinance at today's mortgage rates. Well, look at what's coming here. In September 8th, CNBC reported that apartment rents are on the verge of declining due to massive new supply. Right now, we're at a 50-year high in apartment construction. So you have so much supply coming nationwide. Well, now November 20th, so October and November, rents fall for the second month in a row. So the trend's coming, rents are starting to soften. Now you may say, John, not in my area, rents may be down $50 or $100 or, they're flat. Look, when you have 20 units, 100 units, 1,000 units, and you're losing $20, $30 on every single door when it comes time to, renewing that lease, it's a problem, especially when insurance and taxes and borrowing costs are continuing to rise with it. You have your costs going up like this and your income going down like that, it's an issue. It's a very big issue. Now in Austin, for example, they have higher insurance rates due to climate, right? So this is what they're saying. And you start to look at climate, costly disasters, send Texas homeowners insurance. It's a big issue incoming for Austin. But now let's look at this. Because this situation, you couldn't make this stuff up. Like, this is absolutely crazy. Borrowers could go begging when refinancing real estate. Overdue commercial property loans at a 10-year high. Why is that? Well, when you buy commercial property, 5 units and above, you're not getting a 30-year fixed rate loan. It's not like buying a house. Every 3 years, 5 years, 7 years, or 10 years, depending on the loan, you have to go back to the bank. And you knock on the bank's door and say, hi, bank, I have a 10-unit property. This is how much money the building's making. These are my new expenses. And the bank is going to say, I'll either give you a loan or I'm not going to give you a loan. Or if I give you the loan, you have to bring more money to the table, or I'm only going to give you half as much money. And so this is going to be a big issue when you have, $2.7 trillion in debt that has to get refinanced over the next couple of years. A lot of these banks are going to not want to lend the money on these deals. And so what are you going to have? You're going to have a disaster that's forming inside of commercial real estate. I mean, here's a really good example of this. A TREP analysis found that Washington, D.C.'s, for instance, 71.9% of multifamily properties financed with CRE, collateralized loan obligations, didn't earn enough rent to cover the debt. TREP attributed some of the pain in that pool of troubled loans, which totals about $1 billion, to the remote work policies among federal government offices, the dominant tenant base in the city, which have allowed workers to migrate and work from afar, weakening the local rental market. Falling property prices have compounded the problems for investors. MSCI estimates in February that apartment building prices have fallen on average by 8.7% year over year in April. Green Street estimates they'll be declined by 21% from a year ago, right? Now, it's very fascinating. So in peak mania, 2020, 2021, 2022, interest rates are damn near zero. Everybody knows that, right? But even with record low interest rates, people opted out for taking on a 2 or 3% mortgage. Instead, they're saying, I'm going to do interest only. All I want to pay is the interest. I don't want to pay any principal on the loan. And so what does this mean? It means that when they have to refinance, it's going to get even harder for those people. So interest-only loans, as a share of new commercial mortgage-backed security issuance, increased 88% in 2021 at the height, up from 51% in 2013, according to TREP. Typically, owners pay off this debt by getting a new loan or selling the building. That's a problem. That's a problem. Now let's look at what the White House is doing on a national stage. And this is what I think is such a game changer that people are not taking into consideration. So let's look at this. Look, local land use laws and zoning regulations limit where and how densely housing can be built. This constrains housing supply, perpetuates historical patterns of segregation, prevents workers from accessing jobs, and increases energy costs and climate. Today, the Biden-Harris administration is announcing new actions to fund jurisdictions committed to removing barriers that restrict housing production and preservation by announcing the Department of Housing Urban Development, right? So pathways to removing obstacles. They want to allow duplexes, triplexes, fourplexes nationwide. Now, if you have a situation where the economy is continuing to, soften up and the job market's getting worse, what are you going to start to see? You're going to see so many people looking to generate income on their land. They don't want to sell their property. They want to build another unit, try to put a granny flat in the backyard. That's what we're going to start seeing on a very big scale, I believe, in 2024 and 2025. And on top of this, Biden, whitehouse.gov, conversions can be completed more quickly than new construction costs at a 20% cheaper than demolish and rebuild. Now, when you have a situation where the White House is now issuing $35 billion in capital, and this is at a much lower interest rate than today's interest rates, to go out there to do these conversions, you're going to start to see a situation where banks and the government will actually be financially incentivized not to refinance these buildings, because assets are not based on what a seller determines they are. Assets are based and values are determined by what a buyer is willing to pay. And so if you have a situation where buyers, they might want to go out there and buy these properties, but they can't get access to the debt, what's ultimately going to happen? Values are going to continue to fall. And so if the goal is to do a lot of these conversions, the goal is to combat inequality and to drive rents down to make things affordable, what does that mean for a leveraged real estate investor that bought at the height of the market at a 3 cap, a 4 cap, a 5 cap? It means it's over. It's curtains. It's done. A lot of these investors that don't have liquidity, that they can't, play this new game, it's going to be a big problem for them. That's why when you look at the smart money, the Blackstones of the world, the KKRs, Starwood Capital own 180,000 units. You look at all the big money, all the smart investors, what are they doing? They're sitting here with a mountain of cash, 5.7 trillion in money market accounts, sitting all this money on the sidelines, waiting, because they know a tsunami is about to hit the real estate market. I'm not saying that to be dramatic. Facts are facts. Look at what's going on. I believe a massive opportunity is coming, and I think that if you are strategic and you make the right calls now, you'll put yourself in a position to buy 1 great deal, 2 great deals, 5 great deals, or many more. Depends on your ambition and your goals. But a lot of people are going to be forced to sell. A lot of people are going to be forced into a decision that they might have not anticipated in 2022. What do you think about this entire situation? Do you think we're walking into a massive wealth transfer in the next year or so? And do you think that there's hundreds, if not thousands, of other story builds, maybe not at the same exact AUM, asset under management, they might have 10 million, 20 million, 30 million, 50 million, 100 million, that are going to be able to hold on? I don't think so. I think a lot of them are going to start to try to liquidate these portfolios, or the banks are going to liquidate the portfolios. Big, big, big changes come to this real estate market. Many people thought that the Fed was going to pivot in January of 2023. We're entering, January 2024 will be in a couple weeks. No pivot yet, right? Many people they're getting caught off guard. They're really surprised by the Fed's position on keeping interest rates higher for longer, and I don't think they're going to pivot anytime soon. I think that these investors are getting pushed off the cliff's edge. Drop below. Let's have a conversation about this. And if you'd like to fix your credit to position yourself for what I believe is going to be the greatest wealth transfer in American history, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session for Monday, and I'll catch you in the next one.